April 23, 2016. Barack Obama was into his second term as President of the United States, to be followed by Donald Trump and then Joe Biden. David Cameron was Prime Minister of the United Kingdom. The French president was François Hollande. Blackwave created its most durable and market-defeating account called Blackwave California. California is a melting pot of diverse cultures, industries, and landscapes. We thought naming our managed Forex account after California suggested a strategy that embraces diversity in currency pairs, markets, and investment instruments, aiming for a well-balanced and robust portfolio. Despite facing challenges like earthquakes and wildfires, California remains a resilient and economically strong state whose GDP recently surpassed Germany itself. If California was a country, it would be a member of the G7 group of industrialized nations. While trading Forex is risky, and you should of course consult with a financial advisor, we suspect Blackwave California has a long future ahead, at least as long as its past. Stick around until the end to find out how you can trade this grid trading strategy, which defied the critics, and don't forget to subscribe to see how our other accounts are doing. We want and hope for you to see longevity and profitability for your trading account too.
Blackwave California has always suffered a sort of middle child syndrome, being overlooked sometimes by its more noticeable siblings, such as Blackwave Pacific, which trades more aggressively. However, this relatively placid and relatively overlooked account has lasted half a decade and is still going strong. So what is its secret? We know that it trades grid like the others, but what separates Blackwave California is its lower position size. While Blackwave Pacific hedged trades roughly 0.01 lots per $1,700 of capital, and now risks 0.3% on the first position in the grid, Blackwave California risks 0.01 lots per $3,000 capital under management and risks 0.15% on the first position of the grid. Is it this lower position size that gets Blackwave California overlooked? Perhaps. Most traders, subscribers, and clients would prefer to get rich quicker than this, but this hard to beat. Earthquake-proof account has survived wars, upheavals, Brexit, a pandemic, and is still going strong. Let's give you a practical example of how it might trade dollar-yen.
Let's assume we notice that dollar-yen is technically oversold on a daily or weekly time frame. As with our other account, Blackwave Pacific Hedged, we will want to watch candlesticks for an indication that it has hit support and is attempting to bounce. We will buy 0.01 lots per $3,000 of capital in our trading account and in our clients' accounts at IC Markets. To buy 0.01 lots is to buy $1,000 and sell the yen equivalent. This means that if somehow in some way dollar-yen went all the way to zero, we would lose $1,000 or 1/3 of our account. Try to imagine what might cause the dollar to be worth 0 yen. You might argue that in that scenario, whatever caused this may mean that all money might be worthless. This, of course, is a grid trading strategy, so using leverage, it will not be until we open our third position will we have actually risked potentially the entire account in the doomsday scenario of dollar-yen going to zero. So here's the actual grid.
After a significant drop that takes it far away from the 200-period moving average, we buy 0.01 lots of dollar-yen per $3,000 of trading capital at support, as it is technically oversold, and on evidence of a bounce on the 1-hour or 4-hour graph. On the first position, we are risking 80 pips or 0.15%. The most significant thing here is not the technical analysis, but rather the risk control. Now let's imagine we are wrong. Instead of hitting a stop loss at 0.15% loss, we open a second position and then a third and so on to get a nice average entry. We are not shooting a bazooka at the graph like most traders, but 10 very small bullets. To make it simple, we will keep the spacing at 80 pips per position, though in reality apart from the first position, this may be more or less than 80 pips. As you can see on the fifth position, we now begin to accept that this may not be working, or at least not working yet, and open the first hedge or sell position, using the same position size but going in the opposite direction. We do this again at position 7. By the time we get to position 7, the grid is already 28% hedged. If the grid gets to its final and 10th position, it will be 20% hedged, having 2 sell positions out of 10 buys. There is little point in continuing to add to the grid because each new buy position adds less and less to the average entry, and we feel it is not worth the increased risk. Other grid systems keep adding positions, and some even use a system called martingale where each position size doubles. We do none of this. Now, obviously, we do not want to go 10 positions deep, and in most cases we won't, but if we get the reversal we were looking for, a 20% hedge can be consumed by the original buy positions, and we can aim for break even at worst. On the other hand, if we buy $yen and it goes straight to our take profit, which in this case may be 80 pips or 100 pips, we simply take the profit. Think of how powerful this is. When we are right, it will go to our take profit. When we are wrong, we are bailed out by our low position size and our hedging. We get to shoot 10 bullets at the graph and get a nice average entry and get out of the trade at break even. Heads we win, tails we aim for break even at worst. We pay for this with relatively modest drawdowns, but we feel it's worth it for when all trades close you can withdraw cash. However, no system is risk-free, and we definitely cannot make guarantees. We just can simply point to the strategy and its longevity. If Blackwave California hits a 12.5%, draw down the remaining 80% of the position it hedged. So we now actually have an average entry on the hedge, beginning at position 5, and we will evaluate the market further. It may, for example, be a black swan type of event, and we can watch $yen drop further, and then close the hedge when the market recovers, and we are back in our trade again. Just like its sibling Blackwave Pacific, the most pairs it can trade at any one time is just 2 pairs, so obviously we don't want a high degree of correlation between any 2 trading pairs. In the unlikely event that both pairs hit a 12.5% drawdown each and become fully hedged each, then one pair is closed for a 12.5% loss to the account, and we are free once again to open a second pair and claw back the loss. Think of our accounts as an aircraft running on 2 jet engines, each engine being a Forex pair available to trade. The average return of Blackwave California since April 23, 2016 is 2.69% per month, so as you can imagine, a 12.5% loss can be recovered in a few months, which is a small percentage of the age of this account.
Let's recap. Position size is 0.01 lots per $3,000. 2 pairs can only trade at any one time. 10 linear positions in the grid, meaning all trades are the same size. 2 hedging trades beginning at position 5 and continuing at position 7. The remaining 80% of the position is fully hedged at a 12.5% drawdown, where we may be able to manage our way out of the trade by closing some or all of the hedges as the position recovers. If both currency pairs are fully hedged, then one is closed completely, and we are free once more to move forward again with 2 trading currency pairs. If you forget most of what we have said, remember this: your position size can be compared to the speed you drive. If you have a bazooka-sized position, you are entering a corner on the road at 200 kilometers per hour. If your position size is small and controlled, you hit the same corner at 50 kilometers per hour, which simply gives you time and more options.
So why is this managed account not trading millions? Total deposits into our client managed account over the years amounts to just $632,000, and withdrawals are $654,000. So as you can see, in general terms, more has been taken out than was ever put in, and the account continues to trade. We think that often people get a sense of how we trade in this account, and then decide to withdraw after a period and deposit into other more aggressively traded Blackwave accounts. However, Blackwave California is not an introduction to Blackwave, but rather this account stands on its own 2 feet and has done for half a decade in spite of all that the world has thrown at it. We look forward to trading it long into the future. This video is completely overdue, and we wish to thank both our clients who we directly manage at IC Markets and our subscribers on MQL5 and Signal Start. You too can join the managed account or become a subscriber to Blackwave California at the links in the description. Managed clients pay no performance fee if there is no performance, so what are you waiting for? Another 5 years? Open an account now. As always, consult a financial advisor to make sure this product is suitable for you and your risk tolerance. Thank you.